Hello, everybody. Welcome to Trader Merlin Show. It is your Thursday afternoon edition, probably one of the more exciting Thursdays we've ever seen. It is Popcornapalooza out there. We had so many different stocks reporting earnings. Corey's just rocking out over there. We had so many stocks reporting earnings today.
Trader Merlin Show.
You got a loop there, buddy. I love I'm having this like fractal looping nature going on right now with Corey Lane. So you got to mute your mic, I think, on your computer there, buddy. Perfect. Okay, it was Popcornapalooza, as I mentioned. We had Facebook report earnings. It's up about 7% after hours. You had Apple report earnings. Huge move to the upside as well. Amazon, I mean, I'll bring these charts up for you real quick just so you guys can see it. AMZN. There's your Amazon chart ripping to the upside. Facebook, which I actually am short right now on Facebook, just so everybody knows. I got short at 251.80. That is up right now 7%. Apple, I'll bring up Apple's chart for you. You're looking at Apple's up 6% right now. And then surprisingly, Google. Not that it's falling out of the $1 trillion club or anything, but there is your Google chart on the day. Not looking great in the after-hour session off those earnings. But that is your Chartapalooza. We'll get started today on a different topic. We'll certainly talk about those earnings announcements, maybe even how you trade those. But I think we want to get going with our guest here as much as possible and as often as possible because it was an interesting day. We're going to have a lot of market moves, but I also want to talk about planning. Corey Lane of Traders Army is joining us today, and I thought what better way to get into the trade planning side of things because I know that's what he's doing with his students on a daily basis. So now we welcome Mr. Corey Lane. How you doing, Corey?
What is up? How you doing, man? Good to see you back.
Yeah, it's good to be back. I'm on the right side of the dirt. Do you notice you can't see my camera. All clean shaven. Yes. I almost took the razor to the hair and chopped it since the hairstylist is closed, but I'm not.
Any side of things because I know that's what he's doing with his students on.
I was gonna try and see your beautiful face by pulling up another.
Can't do that. You can do it, but you got to mute.
I can see your beautiful face now. Look at that.
You just got to mute it. There you go. All right, man. How's it going over at Traders Army? You guys doing well?
Dude, it's going awesome, man. Yeah, it's been super fun. I've been doing a lot of one-on-one mentoring lately, so that's keeping me busy, which is really great. Something I haven't done for a while, and just finished up an options intensive, which is a 4-day. I actually turned it into a 5-day course because there was just so much content to cover in options. So, yeah, can't complain, man. Things are awesome.
Awesome. Let's get into our topic du jour, which is trade planning, and I actually don't want to do this for a couple different reasons. Number one, I'm always personally interested in how other traders that I know actually trade, not like some people from Chicago who claim to trade, but traders who are actually doing this on a regular basis, doing it for a living, what their strategies, tactics, and approaches are, because I have mine, and mine is an evolution of watching so many other traders around me. And, you know, I haven't had a chance of trading with you personally in your trading environment, but I know you trade. So our viewers want to know, kind of what is that trade planning? What do you look at? How do you structure your day? So take it away.
Yeah, so great question. And I've actually been working with a lot of students one-on-one who have no real plan. So it's actually caused me personally to dive into my own daily routine because it's easy to say, build your trade plan, and you have it all down on paper. I've seen documents that are 7 pages long. I've seen documents that are 1 page long. I've got a student who sent in a 142-page trade plan.
Wow.
And I'm like, there's no way that you're looking at this every day. It's just sitting in a drawer. And so what it's caused me to do and understand that not many people know how to work with a daily routine or plan is write everything down. And for me, number one, my day always starts with is there any big news that could impact my position? Not just in a good way, but in a bad way. And I'm a big fan of staying away from news-driven events and trading before the event. So I have to know if something's coming up, especially when you're trading options and earnings and all that fun stuff. So I have to know, when those events are happening. Not that I care what they say,
right?
Because I don't believe a word that comes out of a balance sheet or an economic report half the time. I take it all with a grain of salt, but I do care when it comes out. That's the first and foremost, the most important thing when it comes to planning out my day.
Yeah, and on a day like today, we know that yesterday, obviously there was an FOMC meeting announcement, and that completely got overshadowed. Like nobody even cared, didn't even get brought up on mainstream media because everybody knows the Fed's going to stay right where they're at. So that wouldn't be, normally you'd probably be focusing on that. Now we know that's kind of a non-event unless they go negative. So let's just say for today, you start off, and one of the things I agree with you on is my main approach this morning was, hey, let's just take a peek at what's happening with probably the most influential stocks in the marketplace, because that's what's going to drive the equity markets. We know it's had a huge factor in the up move, which has been the FANG stocks.
Yep.
They're all on Capitol Hill yesterday. Of course, a lot of jabbing back and forth. Now you have them reporting earnings. And it's surprising to see 4 of them all report earnings today. Facebook was supposed to be yesterday. They all came out after market hours today and reported earnings. And it was, all in all, a very, very good move to the upside. So you start your day off, you know they're reporting earnings. If you know that you have the big bellwether, monster companies out there reporting, are you the type that's going to look at the options chain for those or look at options plays because you know there's opportunity there? Or are you like me, who's normally going to stay away from it until after the announcement?
I'm like you, I'm going to stay away from it until after the announcement. There was a time many years ago where you could use what are called straddles and strangles in options, where you basically buy a call and a put, either at the same strike price, which is a straddle, or out of the money puts and calls, which would be a strangle. And that would give you the opportunity to profit from a big move in the price of the stock, or B, a volatility rise, which you almost always get going into earnings. Ironically, there's a bunch of stocks, even the FANG stocks, didn't have really great big increases in the implied volatility, which is really, really strange. That's unusual. But I've also noticed that lately the stocks just haven't been moving big enough overnight to justify a trade like a straddle or strangle to hold through earnings. So you're looking at needing an 18 to 20% move to make a straddle or a strangle work in a really meaningful way today. And you're just not getting that. So essentially what I do is I wait till after the announcement. So tomorrow should be fun, because if you've got stocks that are opening up higher or lower due to earnings, especially big names, then I'll trade the reaction to that news, but I won't trade the news itself.
All right, so you start off with the big picture, look at macro news, and I'm 100% with you. I have a 10 laws of trading that I kind of go by, and one of those laws is ignore the news, but listen to every word of it. And it's exactly what you're talking about. It's saying, I can't tell the viewers or anybody else how many times I have been manipulated by an announcement. One of the biggest losing intraday trades I had was on Cisco. Cisco came out with better than expected earnings. They raised their forecast going forward, and the stock did nothing but go down all day long. And every time it dropped, I'd buy another 1,000 shares. I ended the day in 15,000 shares of Cisco long as it just tanked at the dead lows. Cost me 15 grand, and I was just like, you got to be kidding me. So, that is the type of thing where I want to listen to it and understand what are people saying, whether it's GDP, which we had an apocalyptic GDP number for the previous quarter, or earnings announcements, and see how people are responding to that. Because to me, if I look at the easiest low-lying fruit, it's understanding what the institutions are doing and knowing how retail traders are going to react to that news. So that's how I start my day as well. So big news, that's your number one. Then where do you go to from there?
So, well, it all depends upon what I'm trading, really. So in the early morning, when I'm getting going, I'm mainly focused on futures. So It's the indexes, crude oil, and then currencies and gold. That's all I trade. I'm actually considering the corn and soybeans and moving into commodities, but I haven't gone there just yet personally. But after my morning routine with futures, then I focus on stocks specifically, and mainly it's just options. I can't tell you the last time I actually bought an actual stock. It's been at least 6, 7, 8 months since I bought an actual stock, and that was silver when it was down around 11 and 13. So that's been a good, and I'm still.
You're dating yourself there.
Yeah, well, I am. But, I've been talking about silver for 2 years and how undervalued relative to gold it's been. And I see silver up around 26, 27. And what did it close today at? SLV is
21.76.
Just under 22.
Yep.
So I'm short some 23.5 calls because I was expecting a little pullback. But essentially the routine starts with, I go down my watch list, right? So I look at a 200 stock watch list 2 times a week. And I prepare my week, and I prepare my whole week over the weekend, and then I'll do a midweek check as well. And kind of the big thing I'm looking for really quick, and I think you and I had talked about this before, Merlin, is I'll go down 200 stocks in about 10 to 15 minutes, and I'll pick out stuff that really stands out as, oh my gosh, this looks like could have a really great opportunity really, really soon.
Mm-hmm.
Even if I see a great, area that I want to enter, if it's too far away and I don't think it's going to get there in the next few days, I'll just skip it. I won't even bother. But the routine is go down the checklist and see if there's any big, picture patterns that actually stand out to me. I trade, with the overall larger time frame trend. So I think that's really, really important to trade with the larger time frame trend and not try to stand in front of a bus and go counter trend trading. I don't do that so much. But a lot of the stuff that I'm watching right now, especially in the FANG stocks, because they've been so high, it's funny you talked about your experience in Cisco. One of my good buddies who's been long Tesla, he was super excited after hours when Tesla was up several percent. And I'm like, sell it at the open.
Yep.
Sell it at the open. And he didn't sell it at the open. And it just spent the rest, the next two to 3 days just dropping from there. So I'm with you on the news there and paying attention to that. But I'm looking at a lot of these FANG stocks. And I'm already seeing, you're probably talking about this, the Qs are showing relative weakness overall. And so I'm loving the fact that you said Facebook is trading around 249, 250, it looks like right now. I'm loving the idea of some bear call spreads, some short credit spreads above the most recent highs, because I just don't see some of these stocks getting back up there.
Right.
Personally speaking.
I don't either, and that's kind of why I just took a little bit of a stab at some Facebook. Not a huge position, just a couple hundred shares. But, part of me feels like this is the buy the news type of event. You have the buy the rumor, sell the news. This is the sell the news event for me. And I think that if you look at the charts of some of these FANG stocks, we've got .D, and again, we'll do more market analysis in a little bit. Facebook just really seems to be traversing sideways here. And I think that what's happening on Capitol Hill with the congressional testimony will create some problems for these companies. Not saying that they're going to get broken up, but I think there'll be more regulation coming in. I think it could potentially be an issue. And you look at Apple. Apple certainly has been on an absolute tear. But I don't know. I think it's gotten way too long in the tooth. I'm actually going to be doing a video this weekend, which will be released, for Online Trading Academy on Monday, that deals with how much of a factor just those FANG stocks are. I mean, you're looking at almost $6 trillion for 4 companies, and it's really created a huge imbalance in the way that the S&P is calculated. I mean, if you look at earnings today, you had Apple reporting earnings. Apple is up is 5.7% of the S&P. Amazon is 4.7%, and Facebook is 2.1%. So together, just with 3 companies, you're looking at 12.5% of the S&P's total move dictated by 3 companies. That's nuts. And those are all up significantly right now. So my guess is, a question that came through here a little bit earlier was, do you think shorting S&P might be a good idea? And I would say yes. I think that that's probably a good idea based off of the 3 horsemen right now that are pulling it up. You just have to look at where is that level that you'd be willing to sell short the S&P, or are you going to sell some puts? Are you going to buy some puts? It all depends on what your plan is to do out there. But yeah, I think S&P is going to be headed for a little bit of a retracement here, off the open tomorrow.
I would agree with that. Yep. And Apple, I've got a small level just above off the daily charts on Apple that you could very easily spot on a daily chart.
Oh, yeah.
I'm going to show my charts for that it's coming up to very quickly. So I suspect, where is it trading in the after hours? 405.
Yeah.
It's kind of above that right now. So we'll see where it opens. But the hard part with planning trades for tomorrow, you're in Facebook in the after hours, right?
Yeah.
The hard part with planning the trade that I want tomorrow, which is options, is they don't adjust options prices until the morning.
Right.
And so I can kind of set up positions right now, and I can see where those positions are ready, and I'll have them staged. Which I love to stage orders in the after hours when I'm not really, getting caught up in the hype of the day. I love staging orders in the after hours and then coming in the morning and just saying, okay, does this make sense? If it does, place it. If it doesn't, I just delete it. And kind of takes a lot of the emotion out of it that way, which is important. You got to take the emotion out of it.
Yeah, absolutely. And for those that are asking, yes, Apple did also announce that they're going to do a 4-for-1 split. So that'll be that'll certainly change some of the levels that Corey's talking about, but that's not. It doesn't happen tomorrow. It'll happen, I believe, if my math is correct, August 24th. So you got about a little bit over a month before that announcement happens on Apple. So, or at least the split happens, and that's part of the reason why you see this surge. One of the things that happens when a company announces a split, a normal split, not a reverse split. Usually people are flocking in to buy it because the thought is, oh, I buy it now, and then I'll have 4 shares later on. Yeah, you will. but those 4 shares will be 1/4 the value of the 1 share that you bought. But yes, it usually does have a nice move up off of that, and I think part of that's what you're seeing here on the Apple move now. All right, so back to trade planning. You mentioned start off with the big picture. Look at the macro news. What are the sheeple thinking about, right? What information are institutions cranking out to the retail population? Then it's going through and looking at your watch list. Now, it's interesting. You got a watch list of 200. I know a lot of people might think that is a lot and a bit daunting. I assure you that as you get more familiar with what to look for, there's certain things that I guarantee you, Corey, can look through there and just in a half a second look at a chart and go, ooh, I like that. Whereas someone who's new, it's like, okay, hold on, let me see. Where's the institution? Okay, that's a demand. Here's a rally-based. Okay, now it takes a while, but once you look at millions of charts, which there's no doubt I've looked at tens of millions of charts over my lifetime, you start to get faster at it. So 200 is not bad.
Yeah, and I could probably cut that list down a little more because there's certain stocks that I just do not mess with. I don't mess with stocks that tend to gap a lot. So when I come across a chart that's in the list and if it starts to gap a whole bunch, I delete it. I don't even want to bother. If I know it doesn't have the most liquid options, I delete it. Biotech, I kind of do like my mama told me growing up, don't do drugs. And I tend not to mess around with small biotech companies for their, massive uncertainty, which would go along with the same, first thing I look at is any news coming up that might affect a position. And the thing about those small biotech companies is news can come out when you're not expecting it. And I've seen it blow up people's accounts overnight. I just stay away from stocks like that. So I could probably whittle that list down even further to about 150 if I take the time and do it. But those extra 50 only take a few minutes to do.
Yeah, and I think as long as those extra 50 meet the basic criteria of what you're looking for, and I'll point the example back on myself. The watch list I have has like 300 securities, and I don't always go through the whole list. I mean, I know that there's a certain few specific companies I like. I generally like trading indexes because they're a little bit safer. Like Corey mentioned, in my trading plan, I'm not allowed to trade biotechs or drug stocks because of exactly what he mentioned. I have had an 80% gap against me on a biotech stock, and at that, there's not much that feels worse than that. Maybe a divorce. Yeah. Although in that divorce it took 80% of my gains. But
True.
I just ruled that out. And also, guys, one thing I'll add in there just as my own little your trade plan coach here. If you have a stock that you've lost money on and you're emotional about it and you're like, God damn it, I want to get that. I want to get back at that damn stock. Put it on your list of things you'll never trade again. Just eliminate it, right? It's like that ex-girlfriend that you really want to get back together with, but you know that she'll just never talk to you again. Delete her phone number. Remove it from your mind and just move on. There's plenty of other stuff to do.
Yeah. And by the way, that was Apple for me for the longest time. For some reason, Apple was that thorn in my side. I was making great trades on a whole bunch of stuff, but for whatever the reason was, I don't know if it's because I'm so attracted to Apple products that I had like an unrecognizable subconscious, kind of thing for Apple, but I would make these decisions about Apple, and it was literally every trade I would make on Apple. And after about 6, I'm like, I'm done with you. I'll still buy your products, but I'm not trading you. And it's for about a year and a half, I didn't trade Apple. I'm back to trading Apple again. Everything's fine. So I'm sure it was just me at that time.
It's really funny you mention that. If you go back to 2001 was the last time I traded Apple, and it's actually in my trading plan, page 3. There's an Apple logo with a red line through it that I can never trade Apple again. And it's funny because I just want to make the point that it's not that I can't trade Apple, that I don't have the ability to trade Apple. It's just because at that moment of time, it was that one company that consistently took money away from me. And I cannot explain why. I'm not like Corey. I don't like Apple. I think they're the devil. But it doesn't matter. I want to fight about it. But I couldn't make money with Apple, so I just put it in my trade plan, and I could probably trade it today and do very well. But it's a discipline thing. It's one of those ones I wanted to use as like a cornerstone of my discipline. Say, I'll never trade that again. Now, I will admit, I did actually trade put options on Apple once. I bought some put options and was rewarded handsomely. But that was one time in, what year are we in? 2020? It was 19 years. I haven't had traded Apple in 19 years, and I'll never trade it just because it's a cornerstone of my discipline. There you go.
Yeah. And we all have those little things that no one can tell you that little cornerstone or that little line or trading truth needs to go in your plan, because that's something that you have to define for yourself. And I think that's one of the biggest things that I've been finding too when really developing plans individually with people is I don't care who you go to, whether it's Online Trading Academy, whether it's Trader's Army or whether it's Invest Tools or the old Teach Me to Trades or whoever it was that taught you how to trade. Big companies like that are really great at teaching you how to trade, but if you don't have a next level plan that says, okay, these are the rules that are kind of general guidelines and rules that may generally guide me in the direction of what my plan should look like. If you just stop there, it's going to be very difficult, from what I have found, to be successful long term as a trader. You have to start to modify and optimize and create your own, not rules, but your own trading truths, your own guidelines, your own I will do this, I will not do this, your own Bible, right? Your own law book. And so, yeah, it is. And so what I've found is, I've got a bunch of, members at Trader's Army who are also Online Trading Academy students, who are also Warrior Trading students, who are also, you name it. They're students of everybody. And it's like they're really finding that small group one-on-one is really helpful in really fine-tuning that personally. And I think if you don't take the time to fine-tune your rules and laws, it's going to be a very difficult path.
Yep.
That's a big.
Absolutely. All right, so let's. I'm keeping on that thread of the trading plan thing. So we've got the big picture. You got your watch list. A couple questions came in regarding this in two different perspectives. Number one, are you doing that like now, markets closed, to get an idea of things to look for tomorrow, or is it okay, clean slate? Markets are open in an hour. Let me look at that watch list and see what's setting up. How do you juggle that? Are you a post market or a pre market kind of guy?
I am a post-market kind of guy, but then I'll also take a quick peek in the morning, pre-market. And because we're on the West Coast, I can't stand being up super early. So being up too early before the market, I'm not a big fan of, but I do it about 15 minutes before. But essentially, I will just double-check everything that I checked the night before. So I'll spend about 30 minutes each night kind of checking things out, seeing what might be the case for tomorrow, because I know I'm not going to get up an hour early and pre-plan. I'm going to get up 15 minutes before and be ready to go.
Come on, you got kids. You're up earlier than that.
No. My kids, when they were babies, yes, but now my kids are 11 and 13, and they're sleeping until 9. So I've already been up for 3 hours by the time they get up. So by the time they get up, I'm pretty much done for the morning.
Yeah. All right. Yeah, I'm with you. I don't like. I mean, I love California. I know we've got some haters in the group. It's okay. But I hate getting up early in the morning, which is one of the reasons I actually really enjoy the futures market and Forex, is because you have that 24-hour capability. When I was living in Italy, I actually had a map of the world like the one behind me, but it had all the time zones on it, and I simply mapped out time zones that wouldn't work. What's interesting is, most people believe that Brazil is like on East Coast time. It's actually 3 hours earlier. So the market's open at noon in Brazil. I'm cool with that. Like, I could wake up at 11 o'clock, and dust myself some of the sand from the beach party the night before and then trade the open. Yeah. So you got to like think where you want to locate in the world based off. Thailand is difficult because the U.S. equity market's open at 9:30 p.m. That's right in the time you're going out and having fun. So, yeah, not going to work there.
That's not going to work. I could get on board with Brazil, though. That would be rad.
Yeah, it's on the list. I need to go visit it first. Maybe that'll be my next vacation. When you guys hear me announce a vacation, that might be where I'm headed. Okay, so big news. Filter, you're doing it night before. Like me, I like to do it. Of course, I am looking at it, guys, when the market's open, because there might be a runner. There might be something that I'm looking at that's breaking out of a pattern or formation. Whether I'm, you guys know I look at candles. I look at chart formation setups. I'm also looking at supply and demand zones that I'll have mapped out.
Yeah.
Okay, so when you're running through that watch list, is there, you don't have to go through all the specific little details, but what sort of things are you looking at that's gonna make it to your list, your short list for the next morning?
Yeah, so one thing I could do, if you want, I could share my screen, Merlin, and I can show you a couple things that I use, tools that I use. You can have your guests and everybody who's on board kind of take pictures of some of the lists that I use. If you want, I could do that.
Yeah, go for it. Whenever you're ready.
Pretty easy for me to do here. So share screen.
Joseph says Brazil has a great economy and is super safe. Are you dripping with sarcasm out there, Joseph? It's not safe. Contra Costa. All right, domesticated. I grew up in Petaluma, man. I'm a NorCal kid myself, but all right. Let me go back to Corey here so you guys can see his screen.
So do we have my screen?
I got your list. That's nice.
Yeah, so basically this is what I get. This is what I use, and this is what I give all my students and all my members, which is basically do not skip a step. go through them in this order. And this is something that is short and sweet. Most of it is going to become, if it's not already, second nature, but just reminders, right? You know, a lot of people that I talk to are saying, yeah, I have a trade plan and I go through it. I was like, where is it? They're like, it's in my head. And I'm like, bullshit. It's not a plan, right? If your pilot had the pre-flight checklist in his head, how often do you think he or she would skip would skip steps? And would you fly on that plane? And everyone is like, no, I wouldn't. So I literally go through these steps every single day. And so some of these, you know, are kind of, you know, not really necessary. But I go through this list where I basically look at the earnings, look at announcements, stay away from anything. If I can disqualify trading that product, I disqualify it immediately. And that's one thing that I want to mention too, whether, you know, as I'm going through looking for things that might come up that I could trade, and I used to do this as well, but most people look for, are there, you know, let me try to find things that I can trade. Whereas I look down this watch list, and I'll use this, the weeklies watch list. It's built into Thinkorswim, or the penny increment watch list. I'll flip-flop back and forth there. But essentially what I do is I don't look for things to trade. I look to disqualify everything on my list that doesn't look like it's setting up to trade in the next couple of days. And so I almost go through a disqualifying process versus a qualifying process, if that makes sense.
Yep.
And so when I'm going down this list, I'll make sure that all this stuff has liquidity. So kind of bullet point number 2 that I have on here, which is making sure there's enough liquidity and the spreads are narrow and tight enough to minimize slippage. You know, that's something that's really important in options, not as much in the futures markets that I trade, but that's a really important one to make sure that, hey, we're not getting in an illiquid market here.
You know, good, before we move on, real quick, I want to ask you, bring up KODK, right? Because this is one that people have been asking about over the past couple of days, and KODK had a huge move up, right? It was just ridiculous. Now all of a sudden they're a drug company, and you know, the general consensus, at least from my side, is this thing's gonna come crashing back down. We had an individual who was talking about, you know, trading options on this from yesterday, that he was buying some puts, and if you look at the option volume 4 days ago, it was non-existent on Kodak. I mean, there was nobody trading options. So all of a sudden it went from no options to having options, but, you know, tons of people trying to buy it. The implied volatility was up over 250% on these things. You know, this is obviously something that looks appealing, but because of its historical price action and illiquid option volume, my assumption is you would probably run away from this one, right?
Well, initially I'd probably be a little skeptical, but I'm looking at some of these options, and there is a lot of out of the money put option open interest. So the problem with looking at open interest is I don't know what the original trader, the person who initiated this trade, what was their purpose for opening their position on these puts. I think that's a big misunderstanding about open interest, is people think you can use open interest to gauge a directional bias. And sometimes maybe you can, but think about it. The person who initiated the transaction, did they buy the puts or sell the puts?
Right.
Were they buying the puts? And let's say you knew the answer. They were buying puts, and then the brokerage house or market maker opened up the other side and hedged it. Well, let's say you knew that they were buying puts. So they buy puts because they wanted to hedge their long position in a stock, and they're really bullish. This is just insurance. Or they buy in the puts and they're speculators that the thing is going to fall apart. Mm-hmm. And so I don't take away a lot of anything from open interest, except for the fact that all this open interest makes these spreads nice and tight.
Yeah.
And so I love the nice tight spread. So even though there wasn't volume a week ago, if there's volume and interest now in the expiration month that I'm looking to trade. So if you go out to October, let's say that you're looking at buying puts or a put spread or something to try to capitalize on a short-term pullback. You see some open interest out here on the out of the money puts, October 78 days, but it's not nearly the front month open interest, and for that you've got $2, a dollar wide spread.
Yeah, crazy.
No way, no way I'm trading the dollar wide spread. But if it's the right trade, you'd have to probably use some sort of a credit type spread on this, just because vol is at 322%. Holy high.
I actually thought you were going to tell me that this would be one you just go, no, I'm going to move on. That's kind of, I was curious because so many people are attracted to this Robin Hood effect, which is what's a big factor in this pop.
Yeah. Well, have you been watching? Like I've got turned on to this website recently. I don't even know the name of it off the top of my head. It's called Quiver Quantitative. Have you seen this?
Not that one, but I have no.
Quiver Quant, which is really interesting because Quiver Quant gets you into U.S. Senate buying and selling, U.S. House buying and selling.
Oh, really?
Yeah. So you can actually go in and see specifically. And I've only been turned on to this for a couple of days, so by no means am I saying this is like the end all be all. But you can actually go in and see very specifically what these House representatives and senators have been buying, how much, what stocks specifically, when, and so it's really neat. But they have a whole Robinhood, tracker on here.
Yeah, I use a Robinhood page. It tracks it all. It's pretty funny.
It's just hilarious that Robinhood has just has got their own little group and their own little scanners and we're all watching you, Robinhood traders.
Yeah, because they're so smart.
And I don't know, maybe they are, but historically speaking, this feels like the 1998, 1999, outrageous. Anyone can do it. Let me quit my job and take my stimulus check and buy Tesla.
Everybody was a genius in 1998, 99, 97, 96. Everyone was brilliant. And then 2000 hit, and all them smart people just went, like Kaiser Soze, he's gone.
Yeah. See ya. So, so I wouldn't be opposed to trading something like this, especially because I know it's likely to be very volatile, and I really do like volatility.
Sure.
And especially looking at some of these spreads, I mean, the further away months are garbage in terms of spreads. I wouldn't trade those. But if there was a credit spread opportunity using an 8-day, really short-term, nice tight spreads, I wouldn't shy away from that.
Okay, cool.
Yeah, that actually wouldn't bother me.
All right, let's go back to your list there. I want to make because you brought it up. I figure may as well just keep running through it. All right, so you're looking at high time frames, checking out the big picture stuff, which I agree. I mean, you and my list is pretty similar to this. Interesting. You're a trend guy as well, so you see the current trend. All right.
Yeah, but trend on the larger time frame, right? I know that somebody's always asking, what is the trend of XYZ stock? Well, the answer is yes, right? What time frame? Because on a weekly time frame it could be up, but on a 60-minute time frame it's going to be down if prices are pulling down. And so I'm less concerned about the smaller time frame trend, more concerned about the bigger time frame trend, because I want to go with the path of least resistance, and I'll ride that trend as deep as it wants to go. And so speaking of the NASDAQ and the FANG stocks, it looks like the end of a trend with the slowing momentum, more recently. But I did see in your chat, because I do have you up so I can see your handsome shaven face, I did see that somebody was asking about my TOP. What is the top worksheet? And so basically, a lot of you guys, and Merlin, you're familiar obviously with the odds enhancers, which are basically rules, right? Which are rules. And I like to incorporate those types of rules. And I also love the way that we were taught there to score it out, give it a probability score. And so I use basically something very, very similar, except we've made a few modifications. So this is what we give our Traders Army members, obviously, but you guys want to take a picture of it and use it and check it out, obviously you're welcome to. And so, I zoomed in too far. And so basically where we get more specific, I think that's actually very necessary. I always look at where is the fair price value area. So one thing that I've been kind of focusing more on in the past couple of years is not just core strategy, supply and demand, because there's great aspects to that work really, really well. But there's some things that are not talked about in a normal core strategy, supply and demand only environment. And then there's some things in conventional technical analysis, support, resistance, indicators, oscillators. Largely we've poo-pooed a lot of that stuff. And a lot of that stuff is, not great, but some of that stuff actually really works.
Sure.
I don't know if you agree with that.
I do. I think it helps. It's not the answer itself, but it can certainly help.
Yeah, it's not the answer. And also, I got this book more recently, a couple of years ago, Price Action Breakdown, Laurent Demir. Don't know if you ever read this one, Merlin.
I have not.
Good book, good read. It's only about 25 pages, so it's an easy read. It really talks about areas of fair value, and it really dives into clusters of trading where prices have been, seeing a lot of buyers and sellers getting their orders filled because that's fair price. And then this is where you get the supply-demand imbalance when prices move away from that area of fair value. And it really dives in deep to why prices are generally attracted back to those areas of balance, because that's where the most traders got their orders filled.
Yep.
Everybody gets paid. The exchanges gets paid. The brokers gets paid. Orders love to get filled. And so we couple the idea of support resistance, the good aspects of that, supply demand, the good aspects of that, and fair value. And we look at, breakout trades and reversal trades. And so we've got basically a scoring worksheet for breakout trades, and then also a scoring worksheet for reversal opportunities. And the one big thing that I found that was just kind of a, use your eyes, when I first learned it, which is, when a price leaves an area, like for instance, I was trading the RUT this morning, so Russell futures, and caught the quick little move this morning off of this area right here, right? So that's the area this morning. When we talk about how quickly did price leave an area, right, Merlin? It's like, how quickly did price leave? The faster, the better. If it left it kind of sideways and kind of just mildly bullish, it's not great. If it's aggressively bullish, that's really great. And so what we have done is we actually start to measure the angle, so you can take the subjectivity out of even this. We actually measure the angle, and I say, so what I'm looking for is a steep angle of at least 65-degree rally, a 65-degree angle or greater for the strongest rallies. And so most people don't know that their trend lines can actually measure I don't know if you can see it in the data box there. It's the last number in the data box gives you the degrees. The angle at which price left and also arrives is really important. So how I'm looking at price charts is I'm looking at the angle at which prices left and are arriving, but very specific to those rules, right? Yeah. And so we use these worksheets, and of course these worksheets are not something you're going to use for the rest of your life, but they train your eye to know what to look for and what not, and what to stay away from, right? And so our top worksheets, what we call our trade operation plan, is just basically 5 things that give us a final score. Either we can trade it confirmation entry, or no trade whatsoever. So we've gotten, really specific with these, and these are the rules that we use. That is it. These are the rules that we use. Along with that, checklist that I just showed you guys a few moments ago, this is really what trains the eye. Like you said, when you're looking at 10,000 charts, you can say, hey, if I'm looking at swing trades, I go to my daily charts and I say, do I see anything on Amazon that I like right now in the next couple of days? And the answer for me is absolutely not. Yeah. Tesla, no. Netflix, no. Well, yeah, Netflix, I've already got a demand area down here at 455. So I'll literally go down this list and say, I don't see it. Well, NVIDIA actually looks like a breakout opportunity, except we've got earnings coming up and weakened momentum, and it's part of the NASDAQ. And so I think NASDAQ is weak. So it's literally those 4 things just run through my mind in 10 seconds, and I can pass on this stock just like that.
Right. And and I think that's an important one, because a lot of people will look at a specific chart and they keep torturing themselves over and over and over again until it tells them what they want to hear. Like, okay, yes, I'm making excuses for this to go long XYZ stock, and the easier you make it, if you just kind of flash through these things rather quickly, a lot of times you remove the stuff that you probably shouldn't be trading anyway, because it doesn't just pop out at you. I like to have charts when I'm trading, stuff that just leaps off the screen at me and I go, wow, this looks really good. And you don't find them every single day, but usually you should find at least 1 or 2 every day, because there's so many different things to choose from if your watch list is sorted correctly.
Yeah, exactly. And today, what I've been finding the most, other than real small time frame, I say real small time frame, some 60-minute futures levels for stocks, I've been focusing a lot of my attention on iron condors, because not that volatility is incredibly high in terms of implied volatility, but on some of these more expensive stocks like Costco, they're just range bound. I look at Costco and I say, man, this thing's got no directional bias whatsoever. It's not a no for me, but it is a great iron condor. And, Costco iron condor, I just wrote this one yesterday, 320 by 335. 320 by 335 is probably still paying some. Well, actually, I don't know if it's still paying much money because it expires tomorrow. But I'm going to still like Costco when this thing expires tomorrow. I'm still going to like it in this area for the next 8 days. And so, 3 to 5 day, 8 day iron condors on stocks. Let me give you a few stocks here if you guys want them. MU, Micron.
Mm-hmm.
Look at this thing. You know what I mean?
Yeah, beautiful.
MSI, super wide range, and this thing is paying 20 to 25%, almost, every 2 weeks. Costco, MSI, MU, Target, right? I mean, look at these. So these are some fantastic opportunities. Watch earnings coming up, right? So some of these are going to expire soon, but watch earnings coming up. But these are some great stocks I've been finding some great iron condor opportunity on. And who knows, maybe the FANG stocks won't necessarily collapse just yet, but I don't think they're going to rally. So I foresee maybe some credit spreads around the corner on the Facebooks and the Apples and the Googles.
Well, I think it's we don't know exactly where things are going to go, although I do think that here in the next couple of days after we get the FANG stocks to report earnings and the dust settles and people finally look back and go, okay, you were the ones that brought this market up. Your earnings were fantastic. Now, unless everybody else has fantastic earnings, the likelihood of retail pushing this market up and airlines and all that other stuff, I don't know, just gets slimmer and slimmer. The lead horses have already reported. I mean, they're done. So let's see what happens here going forward. I'm not sure that we're going to see a lot of great upside potential. So I'm kind of in Corey's camp. We got some nice shorts set up as well. Yep. Cool. Well, Corey, thanks for sharing your charts there. Appreciate that and the insights. I'm looking at the clock and I want to go into more. I think maybe what we'll do is we have a couple questions on iron condors, but given the time, I think what we should do is probably just get you on another few weeks and maybe we can do a show just on kind of iron condors and how you use those, because I think that you're one of those guys that likes to use multiple leg strategies, not just going directional or selling or buying, but having spread trades and multiple spreads, right?
Correct. Yeah, spread trades I find to be the most valuable option trades out there. And so vertical spreads I use primarily, occasionally calendars, diagonals, things like that, but primarily vertical spreads in the form of debit and credit. Right now I find a lot of credit opportunities, but like in Intel, there's a debit opportunity. So yeah, I would love to come on in the next couple of weeks and just focus on some iron condor rules, because I think there's a lot of safety in a trade like that, but if you set it up incorrectly, there's some massive risk you just don't need to be taking. And so I got some rules around that. I'd love to come back on in a couple of weeks and share my rules around iron condor specifically and just credit spread.
Yeah, absolutely. Certainly we'll dive into more of that. For those that would like more information about Traders Army, it's just to go to tradersarmy.com, correct?
That's it, tradersarmy.com.
I'm trying to D-E-E-R. I should have had it all ready, but I had too many things going on, so I'm a little bit slow today, guys. Sorry, I'm lagging over here. You could probably stop sharing your screen out there, Corey, too. I've had an odd request from a viewer for you, which maybe we can say. He says, I want to hear a drum solo from Corey. Maybe we should do it where we end on your outro is a drum solo by Corey Lane. There's the Traders Army webpage, guys. So if you want more information, go there and you can get all the info that you need.
Yeah. As far as the drums are, I actually tried that on one of our webinars at Traders Army, and Chuck and I tested it out. And I would love to do it, but it sounds like garbage.
Really?
Not my drumming, not my skills. The actual sound coming through the microphones, it just sounds like it's noise. And it's because it's all cymbals, and I've got probably $4,000 worth of microphones in here, but none of them are running through the preamps. It's all just running through the laptop, and so yeah, it's but I could certainly air drum it and make it sound like something.
One of these days, I'm going to get you to do it. I can see you play some drums, my friend.
I'm actually going to figure out how to run all my mics through the preamps through Skype so that we can do that, Merlin.
Awesome. I'm looking forward to it. Well, Corey, thank you so much. Best of luck to you in your trades. Hope that your remainder of your class goes well. Sounds like you got a full class. And from the chat here, sounds like a lot of people are really happy with it as well. So glad to hear that. And thank you so much. Say hi to Chuck for me. Hopefully we get Chuck on the program here soon.
Want to get Chuck on here. So thanks for having me again, and thanks for showing up, guys. I appreciate it always, Merlin. Thank you.
All right, take care, my friend. See ya.
All right, be well.
Bye. Guys, that was Corey Lane of Traders Army giving us some insights into his trading routine. I have a lot of parallels there, and I think, when we start off, I think one of the challenges, at least for me, is you don't really know where to go or what to do. You're thinking all this information, which is literally drinking from a fire hose, and trying to break it down into something that's manageable. I actually love the fact he shared that little checklist with you guys. That's probably a very, very helpful thing. That's he says part of what's given out to his Traders Army students. Having something like that for you, and it doesn't need to be exactly what he wrote. You can take that maybe as a guideline for you, and you might have a slightly different approach, different time frames, maybe different strategies that you're implementing. But regardless, you can use that as a guide point for what does that daily routine for you look like. And again, all of us are going to be different. Everyone's using different time frames and different strategies and indicators and tactics. So it's important that you don't take it and say, I have to use it as the way it is, but it might be a good reference point for you to start out. So cool. Yeah, Alpha. Apple announces that 4-to-1 split. We talked about that earlier. That's probably a part of the reason you're seeing that big pop up. People love it when companies split. They think they're getting a lot more bang for their buck. And historically, I have seen them rally because of that. You've got until, August 24th or 25th, I think, before it ends up splitting. All right, guys, thank you for that. If you guys liked our guest today, Mr. Corey Lane, Traders Army, do me a favor, click that thumbs up button. Hopefully you guys enjoyed that. You can also leave some feedback down below the video on our YouTube channel. Of course, for those of you who might be new, hit the subscribe button. You can also send in questions anytime at tradermerlin.com. Always happy to hear from you guys, whether it's positive or negative. I've gotten my share of negative feedback, and I appreciate that as well. It's actually good to get that because I can help make this show better and better and better, which is the goal to do on a daily basis. Now, let's take a peek at briefly what happened today. I'm not going to go through all the market top 7 like I normally do, but I will go through some of the pieces that I found interesting for today. Obviously, we talk about that advanced GDP number. That is right here. They're expecting it to go from negative 5% contraction of the U.S. economy advanced GDP numbers to all the way down to negative 34.5%. That is a colossal slide. I don't know if historically we've actually ever been that low. I can probably bring up the chart for you guys, so you bear with me. I will see if I can get the actual chart for that. But we didn't come out as bad as expected. We expected negative 34%. We came out at negative, call it 33%. On the advanced GDP number. So all in all, it was better than expected, but an absolutely horrible number on the day. Now, let me see if I can bring that chart up for you. As I mentioned, I'll throw this over here. Forex Factory has a really good site where you can look at the different economic data in chart form. Here you guys can see going back to 2000, this is the chart of that advanced GDP numbers. As you can tell, we've never been here before. Nothing even remotely close. Even at the lowest point of 2019, when we were just falling apart and people were screaming in agony over these financial markets, we were only at negative 6.1. We hit negative 32.9. Now, of course, next quarter will bounce back, but will it get back up to those numbers that we are used to, those very lofty numbers? I don't know. We shall see. All right, back to your economic calendar. That was really it that was noteworthy for today. The unemployment claims are pretty much in line with expectations, still very high compared to historical norms. Now, earnings. This was the big stuff that happened today. I just wanted to show these numbers because Amazon's one of those numbers you go, goodness gracious. They were expected to make a $1.74 profit. They made $10.30 profit. Unbelievable. It was just really, really, really crazy how much they blew out earnings. I actually thought I'd see them up more in the after-hour session. They were only up 6%. Actually, I think it was like 5.2%. But you also had Ford beat earnings. They didn't lose as much money. They still lost. Google beat earnings, but they were down in the after hours about 1%. Most everybody looking really good. Procter & Gamble, MasterCard, all beat earnings. You had Gilead did not beat earnings, and they were looking fairly ugly out there. Now, tomorrow, it's nowhere near what we had today on the economic front or earnings. You start here with their economic announcements. You've got personal income and spending numbers tomorrow. You also have Chicago PMI and revised University of Michigan consumer sentiment numbers. That's pretty much it. You do have some GDP numbers coming out for the European Union. Also Canada, by the way, having a GDP number. So Brendan, if you're with us, you got a big number to think about there. And earnings for tomorrow, it's going to be gasoline day. You have ExxonMobil, you have Chevron. I believe you have Phillips 66 as well reporting earnings tomorrow. And if you're into drugs, you've got Merck reporting tomorrow for their earnings announcement for the quarter. There you go. Let me see. Now that I've gone through that, let me see if I can get to a couple listener questions here. Unemployment claims still going up. Yes, but I mean, they're 1.4 million. That's a lot. I mean, remember, if you go back into mid-2019, it was like 200,000, and now we're at 1.44. It seems like, oh, wow, we're only at 1.44 million. Well, you know, when we're up at 14 million, obviously being at 1.4 is much better. But yeah, it's still very high compared to historical norms. Angela, Merlin, do you know a supply and demand zone instructor who uses long butterflies frequently to trade? I do not. No, I don't. I don't know a lot of the instructors specifically, their strategies and tactics. Most are doing spreads from the options front, but I don't know. Sorry, Oliver and guys. TAOP. I haven't even looked at that one yet, so I'm being careful on TAOP. TAOP. What they reported. Is this after the split? They split today? I don't know. I haven't looked at this one, so I wouldn't trade it anyway, given historical volume. It's really, really, really mild volume, so I'd probably shy away from it. Short on AMD, Merlin. Big Eb says short on AMD. Let's bring up AMD. Would I short AMD? No. Nope. Not yet. I mean, why? And I understand why, Big Eb. You're looking at this going, hey, it's got these big unfilled gaps here. It's right now, I hate to say it, AMD looks like the lead dog in that chip maker space. It's kind of crazy. Bizarre how it's just vaulting. Who cares what the reasons are? You got two giant unfilled gaps. And yes, those will fill, but I'm certainly not wanting to short right now. It looks real strong. I'm going to go back out to the weekly here and see, is there any, there's nothing historically, right? This is all-time highs by a long shot. We'll even go monthly just to show the big picture. You're nowhere near anything on this monthly time frame. So I am not wanting to short AMD. If you wanted to buy it lower, you could be selling some puts here. It'd probably be the best thing to do, but I have no real reason why I'd want to be going short this until price tells me it's going to start to go down. And right now, is it telling you that? If you went by yesterday's candle on AMD, I'll slide this over so we can kind of play the hard right edge thing here. What's going on with my cursor? Hold on. Let's just pretend that it looked like this, right? If I had this chart, you guys can see on the hard right edge of this AMD, I have this little spinning top formation. Okay. I might be inclined to go short, but when would I go short? I'd wait for it to break those lows of 73.90 before I went short on it, and today it did not. It just gapped up and rallied up. So I would be waiting for this one to confirm that it needs to turn. I don't know what the reasons are. I'm not going to try to speculate on what the reasons are. It's simply just going up. So don't try to fight that one. I know it looks like it should fall, but it's not falling right now. What else? Yeah, Tom says who predicts earnings? They need to be rated. Not only that, the one that gets me is the agency that reports oil inventories. I mean, it's just unbelievable how off those guys can be. Let's see, what else we got? Natural gas. Not a big NG guy. I should get John Rowland on the program. All right, looking at natural gas on the daily chart here, I think this would be one that Corey would probably draw attention to as well, because as a spread, you've really got this thing just traversing sideways, right? It's been almost a month where it's been stuck between that 10.5 on the futures contract and 11. Oh, wait, this is NQ. I'm sorry. Oh, my God. Well, this is still the same thing, and that's what he was talking about today is the consolidation on NQ. NG does not look like this. That I know. It should be much, much, much cheaper. Okay. This is a little bit interesting for me. I'm a chart pattern guy, and I love ascending triangles. And if you look at what's going on with natural gas right now, you do have the basis of an ascending triangle, right? It looks like it's coming back down to test this upward trend line. I'd like natural gas long above 193. That would be a little bit. Yeah, I know, GD. I knew it's NASDAQ. I caught it. The beauty of typing too quick. I do like the natural gas chart. I'm not thinking of buying here. You could buy a little bit lower if it drops back down either to that 170 for demand or to the trend line. And this is where you have to make your trading plan rules and say, I'm buying one or the other, right? If you're going to be trading that trend line, then you'll wait till it comes down and taps that trend line and buy it. You could also probably throw on moving averages here, which it's probably coming back down to the 20-period moving average right now. Let's just do it for fun. This is not the 20-period. This is probably a 50 and a 200, would be my guess. 50, 200. Damn, I'm good. All right. Here's your 20 period and your 50 now. And you can see like right now it's actually just came down today and hit the 20 period moving average. So some may use that as your buy point. Either way, you just take a step back and look at what it has done. It is slowly starting to build strength. It's no longer making lower lows. So to me, that's the real critical part here with natural gas. It's no longer making those lower lows. It feels like it's trying to get back above that 193 mark, 194. If that happens, then I think you got a good long trade going on here. There you go. OSTK. Overstock? No, that was Wayfair. Yeah, and this is another one. An alpha, this is the challenge because, domesticated rat. We look at this and you go, goodness gracious, it has to come down. This stock was at $9 in April, and now all of a sudden it's $76. What are they now going to be making cancer drugs too, like Kodak? I mean, come on. You just, it's hard to believe that would be happening. But, you know, there's nothing here. Ooh, maybe there is. Hold on. Let's go back to the, this is on a monthly. Let's go back to the weekly time frame just to see. I'm willing to bet you that you could potentially be looking at going short here on Overstock. If you look at this weekly, you know, maybe you're starting to think about shorting right where it's at, $79. It's still dangerous. You know, that move is just unbelievable. And as the old phrase says, the markets can remain irrational longer than you can remain solvent. So I think you gotta be careful with that one. But yeah, now that I look back and I see that monthly or weekly time frame, I would probably take the time to break down this candle here on the weekly and see if I can get a little bit deeper into that one, and maybe just look at buying some puts on this one so you have limited risk, right? I think that might be a decent way to go there. Merlin, today's this is for Alexander. Today's S&P candle closed with a hammer confirmation. So what is your thought? Let's go. I'm going to go to SPY. And we'll go to a daily. Well, it's not really a hammer, right? Remember, a hammer needs to be a hammer formation. I think you're referring to this last candle in SPY. A hammer formation is a hammer if it's at the bottom of a downtrend. It's really just been sideways for 3 weeks. So to me, this is not a hammer formation. I wouldn't give it any more value than a normal candle. There's really nothing here. I think it goes right back to kind of what Corey was talking about, which is, look, you've got this sideways action here on the ES. No, this is SPY, excuse me. You've got this sideways action, so you know you could be trading a spread trade between 319 and 327, go slightly outside those zones and set your spread, or range bound trade it, or just wait for a breakout. But nothing. The candle formation doesn't really do anything for me. This one, I don't find it to be useful in that. It's got to be at the bottom of a downtrend. What else have we got? Rising Crazy Eddies, 85-ish. All right. Well, I think that's going to do it for me, guys. I'm reading through your comments here, so bear with me. Yeah, that'll do it for me, guys. Again, tomorrow I'll have more time to do open questions, so feel free to bring in any kind of questions you have for tomorrow's session. I'd be more than happy to look at charts and analyze stuff. Of course, I love looking at charts and price action all day long. So feel free to send in your comments and questions. Again, you can go out to tradermerlin.com and send me pictures of charts of stuff, whatever you need. Good news, bad news, complaints, questions, things you want covered. Send it at tradermerlin.com or put it down below the video on this YouTube channel. Click that like button, share it if you want, subscribe to the channel, and of course, I will see you all tomorrow. Thank you guys so much for joining us today. Again, if you like Corey Lane, go to tradersarmy.com to get more information about his education. Take care, everybody.